Well, good day, subscribers. Hope you guys are having a great day out there. As always, today I'm going to share with you a very exciting video, my top 5 biggest stock market investments as of today. I'm going to take you through all 5 of these stocks. I'm going to tell you a little bit about each of these 5 companies. In these companies, I have more money in than any other companies in the stock market by far. And needless to say, you guys know the majority of my net worth is wrapped up in the stock market. So if these stocks do great over the coming years, or if they do really poorly, my net worth will be considerably changed for the better or for the worse. So I hope you guys really enjoy this video as always, and leave me in the comment section what your top 5 biggest investments are in the stock market as of right now. And also let me know what you think about these top 5 stocks that I have. I would love to hear from you guys as always, and make sure you smash the thumbs up button if you enjoy me sharing a video like this. All right, guys, let's start getting into this. So number 5, my 5th biggest investment in the stock market is this company here, ticker symbol IRBT, Irobot Corporation. As of today, this is a $55.88 stock. And if you never heard of Irobot Corporation, you don't know what they do. They essentially make different products that can clean your floors, okay? They're mostly known for their Roomba brand, which essentially will just vacuum up anything, whether you're talking about tile floors, whether you're talking about carpet, hardwood, it doesn't matter, it will vacuum it all up. Then they're also known for their Brava floor cleaning products, which essentially will clean hard floors as far as like mopping and those sorts of things. And those are 2 main products, with Roomba making up the majority of their revenue and profits for the company. And they just came out with a new product recently that will actually cut your lawn. I do not believe that product will do that well in the market. I think that will always be a very niche market. And I think this company will continue to either thrive or not thrive based upon how the Roomba vacuums do, okay? Now, if we look at Irobot Corporation, this was a stock that was just getting hammered and hammered and hammered. And throughout the late summer into the fall, I recognized this and I said, you know what? This company has gotten a little undervalued. And I started to buy a lot of shares in the 50s and especially a lot of shares in the 40s, and I ended up building into a pretty good sized position, which is how it turned into my 5th biggest stock in the entire stock market. And if you're wondering why did this stock get so hammered from $100-something a share, $120, $130 a share, down to $50, $40 in a matter of 6 to 9 months? Well, it had to do with the tariffs. Basically 25% tariffs got slapped on their Roomba vacuum cleaners and their other floor cleaning products, which just absolutely destroyed the business model in the short term when it came to profitability. And when I looked at this as like, well, this is something short term that is hurting the business substantially right now, but I don't think these tariffs will necessarily last forever. And if for some reason they do last forever when it comes to the tariffs, then iRobot can just move production out of China over time, okay? And a lot of people got caught into, maybe iRobot was having trouble with competition. And at the end of the day, the lack of profitability recently for the company is 100% because of the tariffs. 25% tariffs are nothing to sneeze at. It's not like you can just go and raise prices by 25% on Roomba vacuum cleaners. It doesn't work that way, okay? But people really thought it was because of competition. Now, there is a ton of competition in the space. Like if you type in on Amazon.com, like robot vacuum, first off, the first ones that come up are iRobot brand, which is absolutely phenomenal. But there is definitely a lot of competition in the market. There's a ton of different companies, mostly Chinese knockoff companies, that make competing products with the Roomba. But when it comes to the end of the day, and you got to actually make that purchasing decision, you see these 3 robotic vacuum cleaners lined up there. I can almost guarantee you never heard of the eFui company or the EcoVax company, but you probably have heard of the iRobot Roomba company. And so if you're on the Amazon webpage there, you can certainly go for the cheapest one, which would be that $199 product, and risk $200 on maybe a product that's not that good from a brand you've never heard of that's probably out of China. Or you can spend a little bit more and go with the Roomba brand from a brand you see on television commercials all the time. You probably have friends or family that might have their products, and you probably actually know that brand. And so at the end of the day, if you're going to spend $200, $250, $300 on one of these products, you're probably going to want to buy it from a company that you know of. So that's why I think brand name is always, exceptional in the market. And when you're talking about the robotic vacuum cleaning market, Roomba has the premier brand. They have the most popular brand. They have the most well-known brand. It doesn't mean they're going to get 100% of sales, but usually the one that has the strongest product with the strongest brand will continue to thrive over time. And then if you're thinking about the high-end end of the market, okay? So obviously when it comes to like robotic vacuum cleaners, you're gonna have most of the action in the lower price vacuums. And Roomba's gonna compete successfully there. But then if you look at the high end, there's almost no competition if you're looking at the very high priced robotic vacuum cleaners. So which means Irobot has that market pretty much to themselves. So they compete extremely strong on the low end, so those $200 to $300 price points. And they also are the dominant leader if you're talking about the $800, $900, $1,000 price points, okay? And at the end of the day, the whole old let's push a vacuum cleaner around, I think that's just over. It's hard for me to imagine in 10 years, somebody's pushing a vacuum cleaner around their house like your mom might have, or your grandma, or maybe you'd currently do that around your apartment or your house. Those days, I think, are just starting to leave us. And I think the future is all about robotic vacuum cleaners and just robots that can clean your floors for you. And nowadays, they can pretty much do just as good of a job as you, but you can, schedule these things to run every day or every other day, versus people would, vacuum their place maybe once every 2 to 4 weeks. And I know some dirty people, some of you guys might, like hardly ever vacuum, okay? That was the 5th biggest stock I have. The 4th biggest stock I have in the stock market is a company called Uber Technologies. Ticker symbol on this one is UBER. As of today, this is a $34.68 stock. I mean, if you have never heard of Uber, like what the heck? What rock are you hiding under, okay? So Uber is obviously the biggest player in the world when it comes to access to rides on demand, ride share, whatever you want to call it. Bottom line is, if you need a ride somewhere, you go on the Uber app and you get a ride somewhere, okay? They're also one of the biggest players in the world when it comes to food delivery through their Uber Eats app. And those are their 2 main businesses, okay? Now they also have a 3rd business that is pretty good size as well, and this business is growing extremely fast, and that one is called Uber Freight, which essentially connects shippers and truck drivers directly with kind of like no middleman there. Well, I guess Uber's technically the middleman, but their fees are usually much less than what has historically been charged there, where the middleman would take a 10 to 15% fee. Uber a lot of times is taking a 1% fee, sometimes even less than a 1% fee. So Uber's really coming in that freight market, and they're competing hard the same way they did with rideshare, and I think they're going to be a hard company to compete with. And if I'm looking out 5 to 10 years, in my opinion, there's a decent probability that the majority of truck drivers, if they're thinking about a delivery somewhere and they're trying to connect with a shipper, they might go directly through the Uber Freight app, okay? Huge opportunity there for the company, and there's a super fast growing part of their business, okay? Now, if you're thinking about a little further out things that aren't making them any money today, but they're putting a lot of money into when it comes to research and development, one would obviously be self-driving cars, which they're partnering with a few different brands on. Toyota being one of them, Volvo being another, okay? Also, their Uber Elevate product is going to try to change air transportation in a massive way when it comes to cities. So they're spending a lot of money on those 2 products. They're things that aren't making the company any money right now, but 3 years from now, 5 years from now, 7 years from now, it could be game changers. They also have Uber Health, which I think could end up being a much bigger thing when you think about all the baby boomers aging over, let's say, the coming decades. When it comes to healthcare, it's very important that you actually get to the hospital or get to the office where the doctor's at, or things like that. And sometimes, transportation is unrealistic to somebody that might be 80, 90 years old. And so a product like Uber Health, where somebody can get a ride, get driven there, could be absolutely, a phenomenal thing, not just for the world and for humanity, but for Uber's business model as well, okay? And the last part of their business they have, which is a smaller part of their business, is called Jump Bikes and Scooters, which you might have seen around some different big cities around the world, okay? So as far as Uber stock, obviously this was a company that went public in 2019, and I kept my eye on it, and it was interesting. It was interesting to see, how low of a valuation it came out at versus what, a lot of folks had expected, which was $100+ billion valuation was expected, and then they IPO'd at 70, 80 billion. So it was interesting to see that, and then I watched the stock fall and fall and fall. And meanwhile, I was looking into Uber, and I'm like, I really like this business. And so finally, I had to say, you know what, enough is enough. I got to start buying this stock. And throughout the fall time, I bought shares, and I bought shares, and I bought shares, and I bought this stock extremely heavy. Throughout the fall time, as that stock, dove into the 30s and into the 20s, I looked at this stock and I'm like, this is going to be a profit beast in the future. And this is just a company that has disrupting industries at its core. And when the company has that at its core, those are usually the companies that grow to be the companies that have, market caps in the hundreds of billions or, $1 trillion plus. And that's exactly where I believe Uber is headed over time. time. I think we'll make a lot of money in that one, which is why I built into one of my biggest positions. And don't be surprised if that one shoots up a ton over the future years and ends up getting into, like, let's say my top 2 biggest positions. It might just end up happening, okay? Stock number 3, that is my biggest stock market investment, is a company named Skyworks Solutions. Ticker symbol on this one is SWKS. As of today, it's about $123 stock. And when it comes to Skyworks Solutions, they make a ton of different connectivity chips and different chips in general for a ton of different electronics products. But, you know, to put it into simple terms, just like type in, you know, a tear down of your iPhone that you have in your hand right now, or that Samsung you're holding, or pretty much any smartphone brand if you're watching this on a smartphone right now, okay? If you just go to a teardown, you will see a ton of different Skyworks chips in there. Usually 3 to 6 different Skyworks chips you'll see in most of the biggest smartphone manufacturers are because of Skyworks. So if you're thinking about, like, how does this iPad connect with this? How does my smartphone connect with this? A lot of that connectivity happens because of Skyworks Solutions chips, okay? Now, this was a stock I started buying extremely heavy in the late part of 2018 when the market was just getting tore up, because Skyworks was just getting tore up as it was. And then you have the market just get extremely weak in October, November, December of 2018. Stocks were just getting destroyed. And Skyworks, next thing you know, was trading at 80, then it was trading in the 70s, and for a bit it was even trading in the 60s. And so I was absolutely loading shares, loading shares, loading shares. And if we look at something like my public account, which is available for every single person in my private stock group to see every single move I make in that account, if we look at that account there, I have a cost basis on Skyworks Solutions of $75.70. And this was all possible because I was out there buying Skyworks Solutions shares extremely heavy. I looked at the market. The market was valuing Skyworks like this was a company that had no growth going for it. It was at a forward P of like 10 to 12 on a lot of the shares I was buying. And I'm like, this is ridiculous. This is a company that is probably going to 2x their business, if not 3x their business over the course of the next 5 years. And the stock market was getting so caught up into the short-term negativity in the trade war at that particular time, in the Huawei situation, all this short-term mumbo jumbo, and Apple was having trouble, you know, selling iPhones. And the market got so caught up into all this negativity and all this negative thinking, and Skyworks is valued over here like as a value stock, and I'm like, this is a big growth stock. And so I looked at this was a huge opportunity, and I took full advantage, okay? 5G is going to be a game changer when it comes to Skyworks. You know, one thing is there will be a lot more units sold of pretty much all devices as 5G comes out. But the other thing is Skyworks chips are going to be much more expensive in 5G. 5G is a whole technology change, and a company like Skyworks Solutions has, you know, put a ton of research and development dollars into this. This is something that will grow the business's revenues and profits substantially over the next 3 to 5 years, and you should see that in the financials over the next 3 to 5 years. Don't be surprised at all if you see, you know, Skyworks' revenue and their net income 2x, if not more than 2x, over the course of the next 5 years. And when it comes to Skyworks, it's also a very good dividend stock for me. So as of today, it just has a, you know, forward annual dividend yield of about 1.5% if you're buying shares today. But most of the shares I bought where it was, you know, yielding a 2 to 2.5% yield. So I ended up getting this stock that was valued as a value stock with no growth, that it actually is going to be a big growth stock, and I was getting a dividend yield of 2 to 2.5% on all the shares I was buying. And I just looked at this as, you know, this is going to be pretty easy money for me, and it's turning out that way. And we'll really see my bullish thesis come to fruition over the next 3 to 5 years as 5G technology starts to take off in a major way. Now, the stock number 2, that is my biggest investment in the stock market. This was a stock that was my old first biggest investment, and it's not my first biggest investment, not because I sold off any shares, but because this other stock just went up so much. But this was supposed to be like my main stock, but it just, like, this other stock just, you know, kept doing like ridiculously well. So my second biggest stock in the stock market is a company named Facebook. Ticker symbol on this one is FB. As far as how much does it cost for a share of the stock, $221.77. By the way, if you're thinking about, if I was to think about like what's probably the easiest money in the stock market, in my opinion, it's by far Facebook. It's just almost impossible for me not to imagine the stock is, you know, substantially higher 3 years from now or 5 years from now than it is today, okay? Now, in terms of when I was taking advantage of buying the stock super heavy, it was once again kind of around that Skyworks time, and even leading into the beginning of 2019. This was a stock that was caught in the Cambridge Analytica situation and just a ton of negativity around Facebook, and it was caught in the eye of the storm, okay? If it was a hurricane, it was right around the eye. It was violent. There was nothing but negativity being put out there by Wall Street, by Main Street, by the mainstream media. Some of it was justified, during this time, and some of it was unjustified. You got to keep in mind, a company like Facebook is taking advertising dollars from everything that is in mainstream media. And so if you're a big company, let's say you're Coca-Cola, and you spend $1 billion a year on advertising, and a certain amount of your budget is allocated toward traditional media, things like television and whatnot, and all of a sudden you're spending more and more money on Facebook and less over there, then anytime something goes wrong with that competitor over there that's taking your money, you're going to go and attack them, okay? So some of Facebook's negativity was justified, and some of it was, let's just pour on because they're taking our dollars over there, okay? So needless to say, I was loading up in these shares, anything under 170, I was buying super heavy, 160s, 150s, 140s, and I was even lucky enough to get some shares in the 130s for Facebook. And this was a stock very similar to Skyworks situation, where it was being valued like it was a value stock. It was absolutely ridiculous when this was a company that had a ton of growth ahead of it, okay? So current year, company's going to grow 26% plus. Next year, the company should grow around 22%. And it's not just like they're growing revenues, they're growing EPS very rapidly. Next year, they should do $9.14 of EPS. I would be surprised if they do $9.14. I expect $10 plus next year. I actually think that $9.14 is actually a low number in regards to Facebook. And even today, this stock is still valued way undervalued. It's valued at a forward P of 24. To give you some context, Coca-Cola, a company with almost non-existent revenue growth, is trading at a forward P higher than Facebook. Look at Coca-Cola is trading at a 25. So it's absolutely ridiculous. Facebook will continue to grow massively in future years. Ad rates on the Facebook platform will continue to go up. On the Instagram platform, ad rates will increase substantially over the next 3 to 5 years. And this isn't like some kind of guesswork, like maybe this will happen, this will happen. With 100% certainty, this will happen. So this is the easiest money in the stock market. It's just the easiest money in the stock market. I don't know what else to say about it. If you're wondering, like, what stock would I put if let's say I couldn't sell a stock for the next 10 years, what stock would I put every dollar in if I wasn't allowed to sell it for the next 10 years? It would be Facebook, okay? Now, my biggest investment in the stock market, it was never supposed to be this way. This was absolutely supposed to be a stock that I made into a big investment, and maybe it was like a top 3 investment, but it was never supposed to be my number 1 biggest investment. But I bought a ton of shares in the stock, and on top of that, my wife's entire 401k ended up putting into the stock, and my goodness, it just became the biggest, okay? It is Tesla, good old Tesla stock. It's a $513 stock as of today. Ticker symbol on this one is TSLA, and I mean, it's pretty much just because it has gone up like bonanzas the past 3 months. This stock goes from $200 something a share to well over a double up in literally like a snap of a fingers. And when it comes to Tesla stock, I was buying this stock many different times throughout 2018, 2019. I was buying a lot, okay? Anytime it would go around $300, and especially when it would dip under $300, I was taking advantage of that. The 200s, I even was able to get some shares under $200 a share. And so I was loading the boat around Tesla stock because Tesla stock had all this negativity around it. And people were saying ridiculous things like Tesla demand was gone and the competition was going to come and take them out. And all these short sellers, just people negative around the stock, were saying all these ridiculous things. And add on the top that sometimes, Elon Musk did some things that were not the best look for him or Tesla's brand at a particular time. And it was attack central on Tesla stock. And I was looking at this, I'm like, okay, I'm going to take advantage. I'm going to buy a whole lot of shares at $200 something a share, okay? And as far as that, they have no more demand. The company's going to shrink. Revenues are going to go negative. Oh my gosh, here in 2020, analysts, okay, this is analysts. This isn't like the super bullish people like myself. This is analysts have the company growing, 25% roughly in 2020. And don't be surprised if they actually, do a bigger number than that. Don't be surprised if Tesla actually grows, 30%, 35% in 2020 when it comes to revenues. And the other thing they used to say about Tesla was this company will never be profitable. Now there is not even one analyst on Wall Street that expects the company to lose money in 2020. Not even one. The most bearish analyst on all of Wall Street still expects the company to make a profit in 2020 of 85 cents. The most bullish analyst on Wall Street has the company making $14.40 of EPS in 2020. So all that talk about Tesla's never going to be profitable that a lot of analysts were putting out there, That changed. Now there's not even one analyst on Wall Street that expects this company to lose money in 2020. And in terms of looking at what the average analyst estimate is for Tesla stock, the average of what the analysts have the company earning for EPS next year is at $5.93. Don't be surprised if that number's low. Personally, I'm expecting, an EPS number in 2020 of anywhere between $7 at the low range to possibly $12 at the high range. So that $5.93, I think that number might end up being a little low. We'll see what happens. But needless to say, this stock, I just got in this stock because I was like, people think this stock's dying. And I think this stock is going to be one of the biggest companies in the world in the future. Like at least maybe, top 10, top 20 biggest company in the world. Now, I don't want to spend 20 minutes talking about Tesla's valuation, but check out the video I just released probably 2 days ago on the main channel, Financial Education. It's called Let's Talk About Tesla's Stock Valuation. Is Tesla overvalued now? In that video, I go into detail on kind of some of my future growth projections for Tesla and why I actually believe the company will grow to be a much bigger company over the course of the next 3 to 5 years than what it is today. So I hope you guys really enjoyed today's video on looking at my top 5 biggest investments in the stock market. Let me know what your top 5 stocks are for 2020 and beyond in that comment section. Let me know what you think about these top 5 stocks that I just talked about. Do you like them? Do you not like them? And as always, I hope you guys enjoy me sharing this with you. Make sure you smash the thumbs up button. It lets me know that you enjoyed it, all right? By the way, if you want to join my private stock group, that is going to be linked in the description. Thank you for watching. Have a great day.